I'm exhausted. The first year of operating my personal training business has ended. Davis, do you know if I need to do anything with my accounting records before the new period?
It's important you prepare financial statements. This will help get all of the accounting records ready.
Can I do this straight away?
Now you need to make some adjustment entries to the journal. These journal entries are posted to ledger accounts. These accounts, because they are related to others, follow directly from those associated with. Adjusting entries are made for a variety of reasons. You will be able to see if your training business recorded a profit or loss. These adjustments are classified as being entered prepayments or accruals. We start with prepaid expense. We debit it as an expense and credit it as an asset or negative assets.
Examples for my personal training business are advertising and rent. Negative asset would be depreciation on equipment I use. What next?
Prepaid or unearned revenue is cash received before earned. It's recorded as debiting a liability and crediting revenue.
An example being customers paying before they receive training. What about accruals?
Accrual revenue is recorded by debiting asset and crediting revenue. It's revenue you have earned but not received, like paying uncredited after.
That leaves only accrued expenses. Davis, they must be expenses my business has incurred but I'm yet to pay.
You should do those as debiting expense and crediting liability.
What else in my accounts might require change?
Negative asset like depreciation. This is the allocation of the cost of a non-current asset over its useful life.
Accumulated depreciation is adjusted in my accounts. It shows benefits that have been consumed. An example for my personal training business is weights. For the end of the financial period, are there other things I have to do for my accounts?
Chris, you must complete closing entries for temporary accounts numbered 305 or higher. Close them into your profit and loss summary.
What's that?
It shows whether you are profitable and determine owner's equity.
What else?
Follow the step 4 closing process.
2 steps are to close incomes to the new profit and loss summary account and close expenses there. How though?
For incomes, debit incomes and credit P&L. For expense, debit the PO and credit expense. Part 3 is to close the PO summary into owner's capital.
To do so depends on whether I record the profit or loss. For profit, I debit P&L summary and credit capital. For loss, debit capital and credit P&L summary.
Step 4 is closing join to capital. It's done by debiting capital and crediting joins.
Now to balance my ledgers. I total the side with the largest value and copy the figure across. I find the missing figure, which represents the account's closing balance for this period and open balance for the next.
Now make a post-closing true balance as it's the date which the period ends on.
Thanks, Davis. Now maybe you could help me by getting some training yourself.